Welcome back to Investing Talk Podcast. Today, we're unlacing a question many of you are asking. Is Crocs, the footwear company, a good time to buy now? We've really looked into a stack of comprehensive sources, financial reports, market sentiment, the whole lot to help us unpack its current standing and future potential for you.
That's right. Our mission today is really to go beyond the headlines. We're examining everything from its financial health to those subtle shifts in market sentiment. We're aiming to give you the clearest possible picture of what the data suggests for this truly unique company.
And just before we jump into the core of our analysis, we want to take a quick moment. If you could hit that subscribe button for us, maybe give us a like, and leave a comment. Your engagement, it truly makes a difference and helps us out immensely. And if you're feeling particularly generous, maybe consider buying us a coffee. We genuinely appreciate your support for what we do here. Oh, and hey, if there's a specific company you'd like us to, dissect in a future discussion, please drop a comment below after we're done talking all things Crocs. So let's get into it. We've got sources analyzing Crocs stock as of late July 2025. We're covering both short-term trading angles and, of course, the longer-term investment prospects. It's definitely a company that sparks strong opinions, right? But today we're focusing purely on what the numbers and the market indicators are telling us. Okay, let's unpack this then. When we think about Crocs, many people probably picture those distinctive clogs, often polarizing, right? But what do the raw numbers tell us about the company's financial heartbeat? Is it just a quirky fad, or is there something, fundamentally strong underneath?
Well, what's truly fascinating here is Croc's journey. It went from being seen as maybe a fad to, a financial powerhouse. Over the past 5 years, its revenue growth rate year over year has been a really robust 27.23%. And its earnings per share growth, an absolutely impressive 51.64%. This isn't just growth, it's explosive expansion. It's been consistently delivering. It really tells a story of a brand that found its footing and then just sprinted.
Sprint feels like the right word for those numbers. Wow. But my cynical side wonders, can that kind of blistering growth possibly be sustained? Or are we maybe seeing a company that's hitting a more, mature phase?
You've hit on a crucial distinction there. While that historical growth has been, undeniable, the sources do indicate something important. Short-term earnings per share growth is expected to slow down, quite significantly actually, to about 2.84% annually.
Okay, so a definite slowdown.
Yes, which suggests the company might be entering a more mature phase of its life cycle rather than that rapid expansion one. However, the key insight here, and this is important, is that this slowdown isn't necessarily a sign of trouble. It looks more like a transition to stable profitability. And crucially, their profit margin is very robust at 23.35%. The operating margin is 24.84%. Now, to put that into perspective,
23% profit margin? That's high.
it is. These figures rank above 98% of its competitors.
98%.
Exactly. That means Crocs isn't just selling shoes. They're almost, literally printing money with each pair. It indicates exceptional cost control and an incredibly strong position within the footwear industry. It's almost unparalleled, that level of brand loyalty and pricing power.
So it's not just growing, it's growing in a way that's incredibly profitable. That's quite a powerful combination. But, a company can look great on paper until you peek under the hood at its balance sheet.
Yeah.
How does Crocs manage its financial stability? Things like debt, cash flow. Are there any hidden tripwires there for investors?
That's a vital question, definitely. Let's put Crocs' financial stability into sort of plain language. Think of their balance sheet as incredibly sturdy, almost crisis-proof, you could say. The company's Altman Z-score, which is a key measure of bankruptcy risk, it stands at a healthy 3.74. That reflects a remarkably low risk of financial distress.
Okay, 3.74, low risk. Good.
And they seem smart with the debt. Their debt-to-free cash flow ratio is 1.68. That basically means they could pay off all their debt in, less than 2 years, just using the cash they generate freely from operations.
Under 2 years. That's pretty quick.
It is. Now, while their liquidity ratios, like the current ratio at 1.52 and the quick ratio at 0.97, are maybe more moderate.
What does a moderate mean there?
It just means they don't have massive piles of cash sitting idle for, say, instant emergencies. But their consistent cash generation and overall strong solvency, it really alleviates any major financial concerns. They seem to be managing their resources very effectively.
So it sounds like a financially sound business, one that's built to last. But in such a crowded market, does it have a true competitive edge? What's their secret sauce, that lets them keep posting these impressive numbers?
Oh, absolutely. Crocs has carved out an astonishingly strong and unique niche in casual lifestyle footwear. Their brand recognition is global and powerful. It's built
Hmm.
on comfort, utility, and yes, that certain polarizing style that actually seems to work in their favor.
Right, the style everyone talks about.
Exactly. And the proof is in their efficiency. Their high return on equity at 48.63%.
48% ROE.
And return on invested capital at 21.12%. These demonstrate a very, very effective use of capital. It's like they're incredibly efficient with what they've got. They have a clear, distinct competitive advantage within the footwear segment.
Okay, here's where it gets really interesting for potential investors, I think. We've seen the strong fundamentals, but what do the valuation metrics tell us? How is Crocs stock priced right now? Is it, a screaming bargain the market's overlooking, or is it maybe expensive, pricing in too much optimism, perhaps?
Well, the sources highlight a fascinating point here. Its trailing price-to-earnings ratio, the PE, is quite low at 6.54.
6.5. That is low.
Right. And its forward PE, which looks at future estimated earnings, is 8.46. Now, the PE ratio tells us how much investors are willing to pay for each dollar of a company's earnings. And a low PE, especially one this low compared to many other growth stocks, often implies the stock could be significantly undervalued.
Undervalued, okay.
It's almost as if the market is grappling with Crocs' identity. Is it still seen as that quirky fad priced cheaply? Or is the market maybe underestimating its long-term staying power and its ability to churn out consistent profits like a mature, undervalued asset? It's also worth noting, it doesn't currently pay a dividend.
Yeah.
So the return potential here is purely on capital appreciation.
So that low PE definitely screams bargain at me, but, well, I've learned market sentiment isn't always rational, is it? When we look at the analyst price targets, are they mirroring this undervalued idea? Or is there maybe more disagreement than you'd expect? It feels like we could be talking about two different companies here.
That's a crucial distinction, yeah. And you've really hit on the core of the market's current uncertainty. While the PE suggests undervaluation, the analyst community is surprisingly split. It reflects a real tug-of-war on Crocs' future. The average 12-month price target from analysts is around $128,
Okay, $128 average.
which suggests nearly 20% upside from current levels. That's, a respectable return. However, some forecasts are much, much more optimistic. They're projecting an average of $231 by the end of 2025.
231. Wow.
With highs even near $281. That would be over 100% upside from today's price.
100% upside.
This massive range highlights that analysts are making very different assumptions. Some see it as a mature, cash-generating machine, maybe. Others seem to believe it's on the cusp of a renewed growth surge fueled by new products or market expansion.
Wow. That truly is a huge range. It really underscores that, yeah, not everyone is singing from the same hymn sheet. Are there any more conservative or even outright bearish predictions out there, just to balance the picture?
Yes, absolutely. To provide a complete picture, there is a contrary forecast. It suggests a slight price decline, actually, to about $106 by August 2025.
Down slightly.
Right. This indicates inherent volatility and uncertainty in the market's view. It underscores that not all analysts are uniformly bullish. It's a key reminder, really. While the upside potential looks significant, downside risks are also present. Investors need to weigh these differing perspectives carefully.
Okay, so beyond the solid fundamentals and those wildly varying analyst targets, what do the technical indicators in the overall market sentiment tell us, specifically about Crocs stock performance in the very near term? Are traders seeing a clear direction, or is it more of a mixed signal?
Looking at the technicals, yeah, the stock has recently been trading in a bit of a range, around $106 to $109. It's quite close to its 200-day simple moving average, which is a key long-term trend indicator. That's at about $106.62. And its 50-day SMA, a shorter-term trend line, is around $105.06, so very close together.
Right, near those moving averages then.
Exactly. And its relative strength index, or RSI, is currently moderate, about 47.48. The RSI is a momentum indicator, right? And a reading around 50 like this means it's neither really overbought nor oversold. It indicates a more neutral stance from traders.
So it sounds like it's been kind of moving sideways recently, not exactly a rocket ship shooting up, but not plummeting either. Would you say it's caught in a holding pattern?
Precisely. That's a good way to put it. Given its recent range-bound price action, and with only 43% green days in the past month.
Green days meaning days it closed higher.
Correct. Days it closed higher than it opened. So the momentum appears neutral to maybe slightly bearish in the very near term. This naturally leads us to ask, Okay, where does the stock find its floor, its support, and its ceiling, its resistance? Key support seems to be pretty firmly near $105. That level has acted as a psychological and technical barrier recently.
Okay. $105 support.
Resistance levels, points where upward movement tends to stall, look to be around $128 to $130, which interestingly aligns with some of those average analyst price targets we talked about earlier. And then
Yeah.
there's stronger resistance up at $150, which was its 52-week high.
And how much does it tend to swing compared to the broader market? Is it a smooth ride or more of a roller coaster?
Its beta is 1.38.
1.38, so more volatile than the market.
Yes. Beta measures how much a stock tends to move relative to the overall market. A beta of 1.38 means Crocs usually swings about 38% more dramatically than the broader market, both up and down. So when the market wiggles, Crocs, well, it wobbles a bit extra. It indicates moderate volatility. You should expect more significant price movements than with a less volatile stock.
Right. Good to know. What about the general mood, the sentiment around the stock itself, or maybe the market in general? Does the crowd love Crocs, or are they still kind of on the fence?
Well, analyst ratings are generally quite bullish. The average rating is buy from the 13 analysts covering the stock,
13 analysts saying buy.
which suggests the professional community largely sees upside potential. However, we also need to consider broader sentiment indicators. For example, the market's widely watched Fear and Greed Index, it's currently expressing fear with a reading of 39.
39, okay. That's leaning towards fear.
Exactly. It points to a more bearish sentiment in the market overall, and that's likely contributing to the more conservative near-term price forecasts we've seen, like that one around $106.26. So there's definitely a tension there between the professional assessment of the company itself and the broader market's cautious mood right now.
So looking ahead then, what events or trends could really shake things up for Crocs, in the coming weeks and months? What should investors be keeping their eyes on?
Well, a significant short-term catalyst, one everyone will be watching, is the upcoming earnings report. It's expected on August 7th, 2025.
Earnings coming up soon.
Yes, and that could be a major driver for the stock price. It depends entirely on how performance measures up against what the market expects. A surprise on the upside could send it soaring. A miss could lead to a pullback. It's a key event.
And beyond that immediate event, are there longer-term growth drivers, things that could really propel Crocs forward, considering its established brand?
Oh, absolutely. Long-term catalysts include continued product innovation. Think new styles, collaborations, maybe expanding into different footwear categories beyond the classic clog.
Right, moving beyond just the clog.
Exactly. There's also the ongoing expansion of lifestyle footwear trends, which Crocs is, frankly, perfectly positioned to capitalize on, and potential geographic or digital expansion, entering new markets or finding new online channels. These factors could significantly improve its long-term growth prospects. And of course, we can't forget the broader macroeconomic factors, things like overall consumer demand, the fluctuating costs of raw materials like resin, and the general health of the retail sector. These external forces will undoubtedly impact future earnings, regardless of how well Crocs executes its own strategy.
Makes sense. And every investment has its inherent risks, right? Crocs is no exception. What are the key risk factors that listeners should really be aware of before considering an investment?
Good point. From a stock-specific perspective, that slowing earnings per share growth rate we mentioned earlier, that might limit rapid price appreciation. It could become more of a value play. Also, while solvency isn't a red flag, those moderate liquidity ratios, particularly the lower quick ratio, could potentially put pressure on short-term operations if there were unexpected disruptions, like supply chain issues again.
Okay, liquidity is something to watch then.
And then there are sector-specific risks. The fashion and footwear world changes fast, right? What's popular today can be out tomorrow. That's always a risk. Plus, there's intense competitive pressure from established global brands and also from those nimble, fast fashion retailers.
Competition is fierce.
It is. And as we touched on, those macroeconomic factors, persistent inflation, shifts in consumer spending patterns, global supply chain issues, they could all introduce significant volatility. And remember that moderate beta of 1.38 means it could also experience more significant swings in the overall market during periods of uncertainty.
Okay, so given all this information, the surprisingly strong fundamentals, those mixed valuation signals, the sort of neutral to cautious short-term sentiment, and these upcoming catalysts and risks, what's the overall assessment of Crocs? And importantly, what does it mean for you, our listener, if you're considering an investment?
Well, the sources, taken together, give Crocs an overall rating of 7 out of 10.
7 out of 10. Pretty good.
Yeah, fundamentally, it looks very sound, demonstrating strong margins and incredibly efficient capital use. From a valuation perspective, it does appear quite attractive, currently trading at a discount based on that low PE ratio. However, and this is critical to note, short-term growth projections and current market sentiment are more moderate to cautious. That signals some near-term risk and potential volatility that investors really should be prepared for. It might not be a smooth ride upwards.
Okay. So for different types of investors then, what would be the best approach? Should you jump in now, or is this maybe a company where patience truly pays off?
Yeah, this raises that important question. Who is the stock most suitable for? For long-term investors, Crocs appears significantly more favorable. Its strong brand, its consistent profitability, combined with those substantial upside projections we saw, potentially over 100% within 2025, according to some forecasts. That makes it look like an attractive long-term hold, despite the moderate short-term risks.
So patience could be rewarded for the long term.
It seems that way. Based on current support levels, the best entry price appears to be somewhere between $100 and $110. That offers what seems like a reasonable risk-return balance for those looking to hold for a longer period.
Okay, $100 to $110 entry zone for long-term folks. And what about those looking for quicker gains? More active traders constantly seeking short-term opportunities.
Yeah, for short-term traders, I'd say absolutely exercise caution, especially as we approach that upcoming earnings catalyst on August 7th. That event could introduce significant volatility, sharp moves either way.
Could be a gamble around earnings.
Potentially. Traders should closely monitor price action around that $105 support level and the resistance near $128. For those looking at specific trading guidance, maybe a stop loss around $98 could help limit downside if the trade goes against them, and take profit targets. Maybe initially near $128, perhaps ramping higher toward $180 and $230 for longer holds if those more optimistic analyst forecasts truly start to materialize. But that's a big if. It's definitely a nuanced situation requiring careful monitoring for traders.
So to sum it all up then, Crocs appears to be a fundamentally strong company, surprisingly robust financial profile, offering potential substantial upside for long-term investors.
Even with some definite short-term market cautiousness and that volatility we talked about.
That's right. It's really a prime example of how looking at multiple layers of analysis, from the balance sheet deep dive to reading the market sentiment, gives you a much richer, more complete picture than just glancing at a stock ticker or relying on a gut feeling. We've certainly dissected Crocs from quite a few angles today. It's a company with surprising financial strength, a truly unique, maybe even iconic, brand identity. But perhaps the real question it poses to all of us as investors is, how much of an investment decision is truly about the hard numbers, the data, and how much is about a belief in a brand's ability to just defy trends and capture the public's imagination one quirky clog at a time? Something to think about.
Absolutely. And always remember to consider your own personal financial situation, your risk tolerance, and most importantly, always do your own thorough research before making any decisions.
Couldn't agree more. If you found this discussion helpful today, please remember to subscribe, maybe like this, and leave a comment with your thoughts. Or let us know if there's a company you'd like us to look into next time. And if you're able, consider buying us that coffee to support our work. We'd really appreciate it. Until next time, keep learning, keep growing, and keep making informed decisions.